Hello, and welcome to Let's Talk MedTech, the premier podcast for the medical device and diagnostic industry. I'm Omar Ford, your host of Let's Talk MedTech and also editor-in-chief of MDDI, an online publication for the medical device and diagnostic industry owned by Informa. On this episode of Let's Talk MedTech, we're speaking with John Babitt, EY's global MedTech leader, and Arda Ural, EY's America's life sciences leader. The two are authors of the newly released MedTech Pulse of the Industry report and are speaking with us from AdvaMed's MedTech conference. We're talking all about the health of the industry, the continued use of AI, the deal activity, uh, the list goes on and on. And look, it's an incredible conversation, and I can't wait for you all to hear it. So, without further ado, let's talk MedTech with EY's John Babitt and Arda Ural. Well, John, Arda, welcome to Let's Talk MedTech. John, you've been on the show before, but Arda, I don't think we've worked together since a webinar we did for Informa back in 2019, I want to say.
It was a long time ago. Yes. Great to be back here.
Awesome, awesome, awesome. Well, let's not waste any more time. Let's jump into EY's annual MedTech Pulse of the Industry report. Specifically, I want to talk about the impact of tariffs on MedTech. How did tariffs affect your clients? And before you answer that, let's put a time qualifier in here because the situation with tariffs has been so fluid and ever changing.
As I typically answer these questions, it's Tuesday. So we will of course, there's a fast evolving situation, but yes, indeed, we released under John's co-authorship the 19th annual report of the Pulse of the Industry. And it's been a good record of the medtech history, how the industry evolved over the last 2 decades. And it's a fantastic evolution, as everyone can attest to. Specific to your tariff question, surprisingly, it is not like one of the top two, three things that is being discussed in the hallways in AdvaMed, in the MedTech conference, which is a good thing. And if I can summarize what's happening is there are two laws under which tariffs are regulated. The first one was the International Emerging Expansion Powers Act, the IEPA, which was enacted in 1977. And that was the one that the administration has used to negotiate a 10% tariff across the industry. That was a couple of months ago. And that was settled. I think the impact was somewhat muted. I think the industry thought they can manage it. And so this was like the industry moved on, if you will. However, just recently, we suspect because of the potential legal challenge to the IEPA, administration also moved along on the medtech alongside 14 other sectors. It's like medtech is not singled out, using the Trade Expansion Act of 1962 from the Kennedy time. And that under that, there is a Section 232 investigation that is started that's going to look at by the Commerce Department. They will look at the picture how it looks like, and then they will, come back and negotiate with the industry. I think at this point, what is more, front and center for the industry is the innovation, the funding, moving forward, the pricing. Those things seem to be supersede the tariff conversation, which is a good thing. So that's kind of what we heard in the hallways and our report and our client conversations.
Yeah, yeah. Just looking through earnings reports, I remember going back in February and looking at the scare of tariffs, right? That everybody was kind of scared. They didn't know what to do. But as we got through a couple of quarters, it didn't seem like the impact was as damaging as first initially thought. So things seem to be relatively tame, knock on wood, with tariffs right now. And again, it all depends on the time that you're asking about it too, because this is a very fluid situation. Yep.
It is. It is. And then maybe the final thing, uh, uh, medical device industry is predominantly a US-based industry from a manufacturing-based perspective. So for that reason, I think there is not material levels of action to be had. Of course, each company has different exposure. If you're more consumables coming from overseas versus more innovative devices to be manufactured in the US, your exposure depends company by company. For that reason, we always advise our clients to have a contingency plan, work with us, let's kind of list those options and then had planned. So for that reason, I think it is happening, and probably not a front and center thinking at this point, thankfully.
Yeah, and Arda, maybe just to add on that, I mean, that's definitely part of the drumbeat that we've heard loud and clear here at the AvaMed, the MedTech conference this week is the real focus on U.S. manufacturing and the, just legacy businesses that, that MedTech has really founded as the center of innovation, not just for the U.S., but for the world.
Hmm. All right, I want to move on to our next topic. And as I was going through the report, I would say thumbing through it, but this is a digital age and looked through the PDF, so no printouts, right? Digital age, right? But as I was going through the report, one thing that really stood out to me is that since the start of the decade, the number of companies in the sector, in the medtech sector, has fallen 11%, while the number of commercial leaders has risen 20%. And it says that the industry is moving toward having fewer, better performing companies, a process accelerated by the acquisition over the past decade of many prominent mid-sized players. Can we delve into this a little bit? What's
Yeah.
happening to the industry from that standpoint?
Yeah, I think there are really three things to really consider is, as we compile our numbers, we have to really rely on publicly available data. So these
Sure.
are the number of publicly traded companies. And, the fact is, for before this year, we had 3 years where we had no medtech IPOs. So a real, drought of IPOs. Now this year we've had about 6 or 7 IPOs, so the window is clearly open. Definitely a positive, net contributor. But that kind of leads to the second point, which is that the real mid cap swath of companies. Look at Inari and Shockwave, Abiomed, all very substantial companies have all been acquired, and so there's a real I call it void. I mean, we hear this at every conference that we go to for kind of small and mid cap and even, companies in that, zip code. So, definitely as we look at, going forward, that's going to definitely be the fact that the IPO market is open is going to be a net tailwind. The other reason really why the commercial leaders has risen is that you continue to see divestitures, and
Yes.
so now you have companies like Healthineers and GE Healthcare, Solventum that are very substantial companies that are now coming out of conglomerates and really on their own, and so that's really contributed as well to the growth of the commercial leader segment.
I remember when I first started in med tech, when I started reporting, you had companies like Covidian, Volcano Corp. You had all
Yeah.
of those, and of course, those companies now have been acquired. Zimmer
Yeah.
Biomed,
Zimmer
were two
and
different.
Biomed.
Zimmer
Yeah.
and Biomed, exactly.
Yeah.
So you're seeing you're seeing such change here, and I'm wondering. And John, I always get you on this. I always ask you this question every year.
Yeah.
What is the phrase looking at this? I know in the past it's been that the spin is in, but based on this question, what's
Yeah.
the phrase?
Look, I think we're going to continue to see. I don't know if the spin, the public spin,
Yeah.
is going to be the path, because we've seen Becton Dickinson just recently executed a carve out of their life science business. Teleflex has announced publicly that they're going to evaluate certain segments of their business, and on the spin side, Medtronic has also disclosed that they're going to be looking to spin that with their diabetes business. So a number of transactions that will either have been or are anticipated to be kind of transacted here over the next year. So we'll continue to see additional portfolio evaluation, Omar, going forward for sure.
Maybe one more, if you're looking at the phrase, probably focus pays off. Probably that's how you can
Yeah.
do it, because someone's backyard is someone else's front yard. And when we did look at just not medtech but everything else, all in life sciences, those companies that transacted both and or sold did better in their total return to capital over the like 2 decades when we did the analysis, spanning those 2 decades. Their ROIC was better, significantly better than the companies that did not have an active portfolio strategy in place. So that certainly helps with the innovation, help with the focus, help with the performance. So we need to continue to see that constant pruning.
Okay. Well, let's talk about financings and venture capital activity. We've seen stronger venture capital rounds, but a decline in the financings rounds. What does this say about venture capital investors' interest in the industry? And I like how the report characterizes this as a tale of the haves and have-nots.
Yeah. So let me start, and I'm sure John will also chime in. So the good news is that the venture capital total spending is up. And then the concerning news is it's like larger, fewer rounds, and the per round basis, it's like 126% more. So which kind of causes this, like you indicated, the have and have nots dichotomy. So the good news is that the large technologies that are later stage and AI sprinkled on top, if you will, AI enabled technologies certainly were able to attract that venture capital rounds. And then the lower early stage technologies, lower maturity technologies on that stack have been struggling, but they're also struggling in the medtech, their biotech, their pharma. I think that's been a concern overall. I think as long as we have funding coming from non-dilutive sources like NIH, which is world's largest venture capital with like $48 billion under management, if you will.
Sure.
If that kind of continues forward, I think the innovation will not pause. But this is also contingent on seeing an exit window. If there's an IPO window opening up, or like dual tracks, or like we just talked a couple of minutes ago, the acquisitions side is helping the early investors kind of to get their returns. So that, because those returns don't go to home in kind of Switzerland. They will be, in our experience, they will be reinvested into the ecosystem, and they actually, those exits proliferate the ecosystem for the next generation and the generation after. So those are actually very healthy mechanics of how this industry works. But John, I'm curious how you feel about the VC environment as well.
Yeah, I mean, it's quite robust for the med tech space. I mean, I don't think I've ever seen, as a matter of fact, I know I've never seen as many $100 million rounds as what we did year to date in 2025. And really it was across a wide, swath of I think therapeutic areas as well. So, certainly cardiovascular had a, big funding round. Today there was another neurovascular that remains a really active space. Robotics has commanded, their fair share. And some of the emerging fields like pulse field ablation and looking at other applications for ablation technologies have really taken off and gotten quite a bit of funding, as well as the pain space. A couple companies that were, both received $100 million rounds in 2025. So really robust on the VC side, which I think portends well for down the road IPO and M&A activity.
And maybe if I may add, there's also a lot of diagnostic imaging. I would say like a renaissance with the AI. I think AI's contribution is really there strong, and we will talk more maybe later on. So.
Yeah, definitely. I want to switch now to mergers and acquisitions. And citing the report here, there are lots of deals or mergers and acquisitions in the cardiovascular space. Super strong activity there. Is there life outside of cardio? Is there interest outside of cardio? And I know one thing that's kind of been leading this whole renaissance of deals in cardio is just PFA, pulse field ablation procedures. The new, and I'm going to quote you from last year, John, but the new stent wars situation, right? With PFA. Yeah.
I think there's still, obviously, there's a lot of participants. It's a big market. It's a growing market. people are still actively going to pursue strategies there. So, that space is going to remain active. But we've also seen deals like the Terumo Tariffs deal in the really in the acute care space that just got announced. So outside of cardiovascular, and I think we'll see probably some transactions in the robotics space. I mean, there's been a lot of funding put towards there. There's some people that are looking to do some different things. Certainly the Histosonics deal as well in the oncology space. I think
Yes.
I know we're going to talk about things to look at in 2026. I think hearing more and more about devices that can be applicable there. And then the other place where I expect to see some increased activity is around AI, digital, and workflow management. So anything that can make hospitals more efficient is really getting a lot of legs. I think there's we're starting to hear and see a lot of the AI case studies actually being deployed. People are here talking about it. 3 years ago it was white space, we might do this, we might do that. Like here now, people, a company yesterday said they're going to have a whole digital segment now of commercializing technologies. And credit to AdvaMed for kind of getting out in front of this and organizing a committee to get reimbursement and get approvals for these types of AI technologies that are really better enabling the delivery of care.
Yeah, no, that's interesting. And I want to jump to talk about AI now, artificial intelligence. And I was talking to a venture capitalist a couple weeks back, and he was saying, hey, if you don't have AI somewhere in your workflow or in your technology, don't even bother coming to us in a sense, because that's what we're looking for. Not just to say that you have it, but how are you using it? Not only as an end solution, but just in your workflows as well. And just the acceptance of AI. It's always been in med tech. It's been in healthcare for a while.
Yep.
Machine learning, AI. I'm not going to parse words or talk about those different meanings, but it's always been a part of med tech. But I think what's happening now is that it is becoming second nature, and it's also used a lot in the workflow processes to make things much simpler. But can we talk about AI and how it's playing out in the industry now, or did I just answer my own question?
No, that was a good answer actually to start with, Omar. But I think there's no video or podcast that's complete without discussing AI, because
Sure.
this is a transformative era, and I think the word I use is AI native for the device, the new devices, new generation devices. If you are not AI native, if you're trying to you got an old home and then trying to plug in a new plumbing into that home, that's not going to work well, because everything else in the home is like aged. So for that reason, AI got to be an integral part of the design process and a problem solving process. Number one. Number two, we heard is the kind of AI's is not just, and then we make the same comment for our clients. AI is not just taking AI capabilities now, which are absolutely improved, and then slapping on existing processes, because that would just not be complete, because that is like what robotic process automation was.
Sure.
So now we are talking about like a total redesign, rethink, and reimagining of the process from product design for or running the companies. That's, I think, a very important thing to know. So we need to be all AI native thinkers in this regard. And finally, AI has many use cases. I can see three categories. One is on the product design itself, like we talked about, and there's some tremendous opportunities in diagnostics, radiology, pathology. Those are like the places to start with. And then of course, whenever you have robotic surgery, AI will be there. And then you just saw some very early stage funding, which is high levels, high multiples. And then the second thing is on the go-to-market capabilities. That's the second area. How do you engage with the healthcare professionals? How do you answer the questions that they have? much better with the most recent data from your library. And then the third thing is just your own internal processes. I mean, SG&A and COGS, and trying to we lived the last 2 decades by outsourcing to cheaper labor arbitrage opportunities, but now it's all about bringing it to an AI native environment that will rethink and reprocess these. And then just imagine when you have down the road computation capabilities increasing with the quantum, for example, then you are living in a different way. It's almost like sci-fi kind of world you are living in. So there's a lot of upside there. There will be failures, no, I mean, like with any technology, but the speed at which scaling up is very impressive. And I personally feel very optimistic about what AI can do for medtech. I wonder, John, how do you feel?
No, I think that's well said. There were several panels, on AI. We talked about it on my CEO panel. I think everybody's very excited about the front of the house opportunities with the patients and with customers, and really the consumerization that they think it'll bring. So one area that maybe we didn't mention, but is the whole customer service and customer experience that I think I'm hearing CEOs are very excited about. That dynamic. We heard on my panel, like, revolutionizing how they deliver functions like HR and finance. So, all that is going to be, table stakes, and, how they engage and, really roll out new technologies, I think is going to be, paramount, because if you look at kind of the best performing, medtech stocks is, probably Heartflow, which was really, I think, marketed a little bit as an AI, play, and because of that, really traded up and has performed very well in the aftermarket as well. So critically important for medtech, all these IPOs, all these M&A strategies to really get that right.
Awesome. All right, I want to jump to 2026. I know we're not there yet. Have a couple of months to get there, but can we have some predictions going into next year? What are some of the continuing trends, or what are some of the trends you think we'll see?
So let me kind of start going after the crystal ball, but like we started in the opening, it's Tuesday, so it's hard to make long-term predictions in this environment, but
Yeah.
there are some secular trends, if you will, that we can talk about. First, I'm optimistic as I look forward, because the innovation and technology is going to get us there, regardless the geopolitical or regulatory concerns. So if you look at the devices for the year to date, as of today, early October, the devices, the kind of investor sentiment, brought devices 3% up almost, versus the pharma, which was underperforming, and now with the tariffs release, if you will, or the relief from the tariffs, they are up 9%, and then the S&P 500 is about 14%. So if you look at that picture, I see devices to be frankly underappreciated overall. And then if you look at the historical performances, so that I think can be an opportunity for valuations to go forward. And when the valuations go forward, it's going to open up a lot of doors. That door will be also, like with the IPO we talked about, there's several successful ones that's going to set the tone for future IPOs. Once you have exit, then the ecosystem kind of continues to evergreen, and that's going to have spillover effect in a positive way for the rest of the industry. What will help is this statement from the Fed that they will be continuing to taper down the Fed rate.
Sure.
That is shown to obviously have an impact on IPOs. In our research, there's a very strong inverse correlation with the Fed rate and life sciences IPOs. So that's going to certainly help, and with it lowering the cost of capital. And then once we kind of box the tariff issues to its limits, like we understand its limits, and no foundational shakeup is happening, I think the industry is in a good spot, because all of those concerns will release financing, and then financing concerns are going away. Innovation to finance is there. So you bring the financing, you bring the overall certainty, and you will bring the valuations up. all I think are indicative of a strong outlook for the next 12 months when compared to the last 12 months. That's kind of my 26 speculation again. It's
Yeah.
Tuesday, but I'll let John kind of speculate also his views.
Yeah, maybe just to pick up where you left off there, Arda, and add a little bit more granularity is that, you know, it does feel like there is potentially some tailwinds from a market perspective and underappreciated segment, and I would argue one of the safer segments within the broader healthcare sector. So if and hopefully that you know transition comes in the discount to where you know medtech is trading to the broader S&P, you know there's a strong backlog of IPO candidates, and so we just hosted a conference recently. We had enough, probably 50 companies. It's amazing to see the number of scaled assets that are really you know at that IPO and or takeout you know level. And so I expect more IPOs. B, we expect to see more dual processes where they look at IPO or M&A. That will indeed trigger, you know, I think a little bit more M&A activity, as well as some of these other transactions that are being contemplated by the larger OEMs. All that really, I think, creates a nice tailwind going into 2026. You know, and hopefully we'll be able to check in with you first of the year out of JP Morgan and get a better pulse of the medtech industry at that point in time.
Yes,
Absolutely.
things are
As long as
always.
there's a pulse. There's a very strong pulse in the industry. That's the good news. There's no flatlining whatsoever anytime soon. And then maybe one last comment. We have not touched private equity explicitly. I think it's worth talking about.
Yeah.
Because this is medtech is very suitable to their investment profile. You are not taking a lot of technology risk, but an execution risk. They have been active in the CRO, CDMO, and other you know peripheral sectors. But I think there's enough dry powder and willingness to go to the especially late stage device segment as well. So we'll see how that's going to turn out in the next couple of months.
Should be an interesting time, and I'm glad to hear that the pulse is strong. Look forward to watching all of this unravel over 2026 and even the next few months. Well, John, Arda, thank you for coming on to Let's Talk MedTech. It's always a pleasure having you all on this show.
Great. Thanks, Omar. Take care.
That's it for this episode of Let's Talk MedTech. Thanks once again to EY's John Babitt and Arda Ural. If you want to check out the MedTech Pulse of the Industry Report, there's a link in the description box, or you can find it at ey.com. And for more content like this, please check us out at mddionline.com. That's mddionline.com. And finally, make sure to rate, review, and subscribe to the Let's Talk MedTech podcast on Apple Podcast or wherever you get your podcasts.